Welcome back to Cheddar's Opening Bell, everyone. Starbucks scheduled to report its fiscal first quarter of 2022 earnings tomorrow after the bell. The coffee giant expected to report revenue of nearly $8 billion and earnings per share of 79 cents. Now, Starbucks has seen a solid recovery in demand since the beginning of the pandemic lockdowns and has continued to open stores around the world. Here to talk more about it, Thomas Hayes, chairman of Great Hill Capital. Thomas, thanks so much for joining us. We know Starbucks has beat expectations in the last 4 quarters. Do you think it'll be able to keep up the streak tomorrow?
I do think so. I like the setup coming into earnings. The stock is down 17% year to date. It's trading at about 25 times next year's earnings, and they're expected to grow earnings next year at 16%. So it's kind of reasonably priced here. Expectations are low. To your point, they have beaten the last few quarters. The question is the magnitude of the beat. So the beat last quarter was very slim, and that's what analysts are a little bit worried about moving forward. However, if they do meet that 79 cents you mentioned and the $8 billion, that would be 15% earnings growth year on year and 29.5% revenue growth year on year, which is strong, but not as strong as the last few quarters. Last quarter was 31% revenue growth. So we're kind of looking at the impact of the Omicron variant for the last quarter, and we'll see how that plays out tomorrow. But expectations are very low based on how the stock is trading for sure.
Interesting. Also, you mentioned the Omicron variant. Do we know how the labor shortage may have impacted Starbucks this past quarter as well?
Yeah, there's some concerns about margin compression. Management expects about 400 basis points on operating profit impact and different input costs and costs attributable to inflation of potentially another 200 basis points. So all these factors have kind of come to a crescendo at once. What you are seeing in their international expansion, they're going to open 2,000 stores in 2022, but they're opening 75% of those 2,000 stores abroad. And one of the key reasons is that operating expenses as a percent of revenue in the United States is 50%, whereas abroad it's only 43.8%. A lot of that is attributable to labor costs and increasing labor costs. So they're taking their investment dollars and moving where they can get the labor costs less expensive and participate in that international expansion.
Yeah, I'm glad you mentioned that strategy. What do you think it means for investors moving forward? Of course, you mentioned the lower costs abroad, but investors not always happy with expansion when it comes to the international markets.
Yeah, it depends. I mean, you saw last quarter comp store sales were up 22% in the U.S., partially because our government has been kept the economy open, whereas international comp store sales have been 3%, and that was weighted. China was down 7% with their zero COVID strategy. So I think as vaccinations accelerate abroad and reopening happens more quickly abroad, that has been slower due to the lack of availability of vaccinations, we're going to see those international numbers pick up dramatically. The numbers in China pick up dramatically, and that will be a very positive thing for Starbucks moving forward. So it would be great to see some good guidance on the international front in this earnings call, and I think that'll go a long way to help recover the stock that's been hit pretty hard in the first month of the year.
Thomas, something else worth noting, we know workers in Buffalo, New York, this past December voted to form a Starbucks union, the first one. Do you think that we're going to see this reflected in the earnings report as well? Any notes from management?
Yeah, they're going to have to address it for sure. This will have an impact. They have about 9,000 company-owned stores in the U.S. Worst case scenario, if you saw 10% of those stores become unionized, so far it's only 2. You mentioned the stores in Buffalo. That would potentially, with wages rising $1.50 an hour, that could impact net income by as much as 3%. It would reduce net income by 3%. That's kind of a worst case scenario when you consider the average contract after they vote to move union. It takes 409 days for unions to ratify a new contract. So this would be a very slow moving scenario if it does pick up steam. It is very uncommon in an relatively unspecialized labor field. It's very common in construction, in pipe fitters, electricians, teachers, people that spend many years of apprenticeships. Unions tend to have a stronghold, teachers, et cetera. In a job that you can start right away and has a lot of attrition, it's very uncommon. As a matter of fact, in food service, it's about 1.2% of food service workers relative to the private sector at large is about 6% or 6.3% are unionized. So the idea of this getting major traction in a business with such high turnover is unlikely, but it's possible. They certainly do need to address it. But the downside is really quantified to what I said. If it really got traction in the coming years, it might have a 3% impact on net income, but that's very, very low probability at this point.
And look, one of the side effects of this pandemic, or just seeing more of the organized labor movement. But I want to ask you before we let you go, what do you see as the future over the next few quarters for this company, especially as we hope that the projections for business travel to pick up will actually come to fruition?
Yeah, I'm pretty optimistic, particularly because of the weakness coming into this earnings and with the stock being down 17%. I think it sets up nicely. I also think that some of the foreign markets that have had meaningful business shutdowns of late are going to be reopening now that more and more of the world has access to vaccines. So that's going to be very, very constructive for Starbucks, who's growing tremendously on an international basis. And we think it's pretty attractive at these levels.
All right, Thomas Hayes, chairman of Great Hill Capital. We'll see how the return to work actually does impact Starbucks. Thanks so much. All right, coming up, crypto prices have collapsed recently as